Welcome to Breaking Banks. Welcome to this special segment of Breaking Banks. It's a mashup between Breaking Banks and Breaking Banks Europe, actually. I have my co-host Matteo Rizzi on. Matteo, welcome back.
Hey, Brett. Always great to share some showtime with you.
Absolutely. You in Lisbon today, or where are you today?
Lisbon, sunny Lisbon.
Fantastic. All right. So today we are going to go down to Africa. Matteo and I have been spending a lot more time in Africa over the last few years. Obviously, big investments are happening in the fintech space there. We have some big names there, obviously, not just the big mobile money schemes, but you have some big, fintech players like Flutterwave and OPay and others making some real traction in the market there. Big investments going into fintech because when we look at the development of commerce, internet-based commerce in Africa, this wave has really just been happening the last few years based around mobile. So, with most of the economies across the African continent, the big boom in internet-based commerce has only happened with the emergence of investment in smartphones. And this is really where this has accelerated investment in fintech in the last few years. So we're very happy to have with us from Fintech South Africa, Andreas Perez. Andreas, welcome to the show. Andreas brings 10 years of working in the financial services sector. He's got detailed knowledge of cryptocurrency and payment solutions. Andreas Perez, welcome to Breaking Banks.
Thank you, Brett. Very, very excited to be here. Like I said to you, when I met you a couple of weeks in Cape Town, you were one of the first books that I read when I started coming into the industry. So very, very excited to be here. Very honored to be here. So thank you very much for having me.
No, thanks for joining us. I appreciate it. I apologize to both of you. I'm struggling a bit with a bit of a cold this morning. So, but that's great. So first of all, tell me about the Fintech Association in South Africa, when it was established, and what's the makeup of the association? Is it primarily startups? Is there mainstream banks? Who are the members, and what's the function of fintech, the Fintech Association there?
Sure. So I started the Fintech Association of South Africa, or the idea, around 3 years ago. Every time that I tried to look for a networking platform for access to resources from regulators, I couldn't find anything coming from one of the largest fintechs in South Africa. Also, all this data was not available. Hence, we decided to create a platform. With this, we came together with a couple of industry leaders. The fintech ecosystem in South Africa is a very small ecosystem where a lot of the founders know each other. And then Fintech Association of South Africa was creating as a non-profit organization dedicated to promoting and supporting the growth and development of the fintech industry in South Africa as a whole. The fintech industry in South Africa was not well represented. We have Payment Association of South Africa, we have the Reserve Bank, we have other associations, but in essence, these do not represent the interests of the fintech ecosystem in South Africa. When we speak about fintech, we speak about different verticals. We speak about payments, we speak about investing, we speak about cryptocurrency, we speak about lending. So some of these industries do have some sort of representation. However, the impact that these ones have is minimum, rather than coming as a collective, because it's a full ecosystem that one decision that gets made, call it on the national payment system, it does affect how the other business operates, call it e-commerce, call it the cryptocurrency. So all in all, we decided to come together as a collective to address a couple of the issues. Like boosting financial inclusion, enhancing financial literacy. There is a big problem in Africa around financial literacy. Promoting a responsible innovation. As we know, innovation is faster than regulation. And, if we as industry leaders, we don't protect our own ecosystem, who's gonna do it? I think not everybody has the same, morals when it comes into the industry. So I think that we do need to protect our own ecosystem because, regulation is not as fast as innovation. Then,
Andre, one could say it was about time, guys, because being South Africa, one of the engine countries, of the continent, you guys were far from being the first one, to set up and organize yourself, even if fintech has been happening, and we'll talk more about it later, I think. This past few months, we helped at the very beginning, the African FinTech Network, back in the days, I think it was almost 7 years ago, and in places like Kenya or Nigeria or Egypt, these sort of organizations were born already. And why do you think that it
more
took
like
so
2014,
long?
right?
Exactly.
Yeah.
Exactly. Why did it take so long?
To be honest, I think is a lack of cooperation. A lot of the founders here, I found that we're dealing with a lot of egos, if I might say it, where people found that, because you're a competitor, I don't really want to come together with you. Everybody was fighting their own battles, like every time, like I think what we did well at Fintech Association of South Africa is to get the support from the regulators, like the Reserve Bank, like the FSCA, and the likes of those, just because essentially they don't want to deal with one fintech at a time. They don't want the one fintech nagging about, like what they want to do and how they want to do it. They just want to have one collective that comes. So it did take some time, and like South Africa is going through a massive transformation when it comes to fintech. We have something that is called Vision 2025. We have the Coffee Act bill that is coming into place, changes to regulations with the FSCA when it comes to crypto, when it comes to lending. So at the moment, South Africa is going through a massive transformation when it comes to payments, which it only makes sense that the fintechs, it was time for all the leaders in the fintech industry come together as a collective.
Do you think also that is part of the reason is that traditionally South Africa has been a sort of a bank-led innovation ecosystem, right? So
yeah, I think that,
if
that seems to be, more of the, like, if you look at what's happened with mobile money alone in terms of like, M-Pesa and other players, Africa was quite insistent that only deposit taking could be done through banks, for example, rather than through, fintech correspondent agents like with M-Pesa and others. So, they have restricted certain elements of innovation that favored the incumbent sector. It's very similar to what's happened in the US to some extent. So this would appear to have created a less attractive environment for fintechs. But is that changing?
Look, I think we need to look at a little bit of statistics of South Africa. There is 43 million people in South Africa, right? Out of that 43 million people, 96% are financially included, meaning they have a bank account. The problem is that, like from data, about 13 million people withdraw the cash the moment that the funds touch their account, right? So call it social grants, call it salaries, call it all of those. South Africa is a very cash-based economy where, people love to feel, and it's a trust instrument that they need to see the money. There is beliefs that, if you leave the money in your account at the end of the month, this money is going to disappear. So there is a massive resilience of, people being educated that perhaps a digital transaction is more effective than to have the cash. Is also a lot safer. But this goes in hand to what I'm talking about is financial literacy, is like, how do we educate most of the consumers that, using the likes of mobile money, something that is called instant TFT here, which has taken, been growing over the years. Card penetration in South Africa still remains low. And, I think the banks have seen that, and the people have seen that transacting via fintech in some option is more convenient, trustworthy, and a lot cheaper than, what your bank. We see the likes of retailers coming, the MNOs coming, playing a massive role in the fintech industry in South Africa. And this is where we will see a little bit of the banks, I wouldn't say taking a knock, because, you know, like something that I always say is like the battle is not between fintech and banks. The battle is around you know, like financially including people in the digitalization of cash. So it's not banks against fintech, it's everything against cash.
How many fintechs are there now in South Africa? Just give us a landscape.
The fintech landscape in South Africa is majority payments companies. I call it around 350, which is 65, yeah, about 350 payments companies. But all in all is about 1,200 to 1,300 fintechs that we have identified in South Africa.
I actually have a curiosity, Andres, because, you know, we of course, you know, insurtech is a very big adjacency, you know, to the fintech space. And whether or not, if you include South Africa, basically you double the penetration of insurtech in the continent from 1.5 to 3%. You know, yeah. So it's and if you exclude South Africa, it's actually literally less than 2%. Are you guys dealing also with that opportunity? Because in such a bankerized ecosystem, insurtech should be a great opportunity as well. So I was just curious whether or not the association includes insurance business as well.
Well, didn't Discover Bank come out of like an insurer there?
We do include insurtech in our as part of our memberships. Now, again, back to what the South African ecosystem looks like. 70% of these 43 million of South Africans just somehow use some sort of insurance product, which is led by funeral cover. So when we talk about insurance, a lot of them use insurance cover, and then we see the likes of retailers, the likes of soccer teams actually selling insurance or funeral cover for their following. So when it comes to South Africa,
funeral cover.
Yeah, you will see.
It's like the most popular insurance. Interesting.
I mean, it's crazy that a soccer team in South Africa has their own insurance cover program in South Africa. I think it's a cultural thing. I mean, if you see some of the funerals,
so who are the biggest
really
fintechs? Who are the biggest fintechs in South Africa right now?
The biggest fintechs in South Africa, I have to say, is the likes of Lesaka Tech, which is, I think a lot of people don't really know, but they process most of the grant payments in South Africa. PayU, Stitch, also Luno, Lulaland, Purple Group, you name it. I think, you know, in South Africa, it's quickly becoming...
FlexCube as well, right? The FlexCube, the one that is doing leasing, you know, car leasing, right?
MobiCredit, FlexPay, yeah.
What sort of, you know, in terms of the notable rounds in terms of investment, what have been the big investments in South Africa in the last few years?
I think the largest one is been by TymeBank, MFS, also Lulaland.
So Time is TYME, right?
Yeah. So it's a South African based, let's call it a neobank.
And how are they going? Because, you know, the neobank model has tended to be a little bit more successful in the West than it has, you know, in Pan-Africa generally.
Yeah, I think it is a big challenge to go against the four main banks in South Africa: FNB, Standard Bank, Absa. Those are banks that have been established for many years and have a big portion of the market, right? But now with the new challenging banks like Capitec, like Ubank, like TymeBank, they are actually slowly acquiring a share of that market by building trust, by, you know, offering different services other than, you know, deposit receiving payments, but more like funeral cover, more embedded finance, lending, easier ways to open a bank account. Like if you see the likes of a TymeBank don't necessarily have branches in South Africa. What they have done is they have partnered with retailers like Pick n Pay to open kiosk in every single Pick n Pay that they have. So essentially TymeBank doesn't have any branches. They use the resources or through a partnership with the retailer.
Actually, I was when I was listening to you, Andres, I was actually thinking that South Africa is literally in a unique position, you know, compared to the rest of the continent, because in a country where almost everybody is included, you know, quote unquote, The problem really becomes, to make the system work in terms of value-added services, because most of the account in a country are pretty useless. And I'm pretty sure, for example, that the informal lending circle, especially in rural areas, are super strong. They don't even touch the bank accounts. So back to, what is even the interest and the concrete actions of the local industry players to actually get into this education and financial industry. And financial literacy.
Well, it's innovation as well, right? It speaks to the heart of the innovation,
Absolutely.
right?
Absolutely.
Yeah.
Absolutely.
Look, I come from a fintech, which at the start, like a lot of people didn't understand how it works, right? The banks educate the consumers that do not put your banking details in other platform other than our bank, right? And instant TFT is pretty much facilitating that payment on behalf of the customer. So you have to go to tell users, to tell merchants that it's not going to take your money, that it is safe, that is secure. So I think a lot of the fintechs, or like some of the fintechs have embarked or paved the road for the new fintechs to develop new products. So like I said, it's all about trust and how much trust does the consumer have on your product, that you're not gonna fall for a scam, your money is not going to disappear, and that your money is safe.
Now, in terms of the regulatory response, what is what's the regulator's position for fintech? Is there a formal fintech charter for banks there? What about for payments licensing and lending? What are the fintech structures in place from a regulatory perspective?
So from a regulatory perspective, is the South Africa Reserve Bank that regulates most of the fintechs, right? So there is the likes of a Payment Association of South Africa, which in essence is in charge of the national payment system, which in essence gives this license to system operators and third-party payment providers to process payments on behalf of their customers, right? Then we have the NCR, which is the National Credit Regulator, which in essence regulates all the lenders, and the FSCA, which regulates all your crypto asset service providers, all your investment service providers, or any of those. So in essence, the regulatory ecosystem is quite friendly. There is something called the IFWG, which is led by the Reserve Bank, and all participants from the regulatory perspective take part in this group.
Interesting.
Go ahead. Sorry.
No, you go.
No, so I actually was curious about, in other part of a very developed fintech ecosystems, as an investor, the statement is that most of the founders are actually not Africans, right? Or they're actually or the best funded startups are, with a non-African team. People are actually, for an investor, it is safer, gives more confidence to invest in a team that, for example, has studied abroad. And I wonder whether or not in South Africa, which is a rather like a more developed structured ecosystem, it has the same phenomenon.
It does, and it's unfortunately. Most of the co-founders are led by white males. I think a report by Brighter Bridges last year mentioned that only 8% of startups in Africa are led by a women co-founder, but in South Africa it's predominantly a white male.
And so how do you think the association can help with that balance, that mix?
Well, what we have done is we started partnering with big corporates, with the likes of AWS, Microsoft, different legal companies, ENS, Deloitte, all of those. And essentially what we're trying to do is identify fintechs, what we call CASITechs, which are based in townships, which are developing solutions that will be deployed mainly in townships. South Africa has a big township economy. So the role that we're playing is to include more those participants. Like once you have an idea, want to start a fintech in South Africa, it's very difficult to navigate the regulatory landscape, first of all, right? I think for you to figure out whether you need a license or not is very difficult because the assets are there, they're publicly available. However, they've not translated into easy information that perhaps somebody not with the level of education from a regulatory or law point of view is very difficult. And there is also the stigma that a lot of the companies that offer those services are expensive. So essentially what we have done is we have decided to sort of like get those partnerships and put it in a package for these fintechs.
Well, that's good. That's amiable because of there's a need to get more obviously localized focus as well as for women and gender balance. One of the other issues that we see coming up obviously globally right now is the impact of artificial intelligence with ChatGPT and so forth. Chamath Palihapitiya, who was one of the co-founding team members at Meta, Facebook, big voice in Silicon Valley, these days. Chamath has come out and said that this is, AI is going to turn venture capital on its head as well, because you'll have much smaller teams being able to now create these, startups. So, is there anything happening right now in terms of AI that's localized on the South African front that in the fintech space?
At the moment, nothing as yet, not part of the regulatory landscape, not part of, I think most of the AI is being used towards marketing, but that I know of, I have not heard anything in the ecosystem of fintechs
well, there's an opportunity, right?
Exactly.
Yeah. Very cool. I mean, I do think it's going to be the next wave of investment is going to be AI. And then I think also, we're going to see new app companies with smart glasses over the next few years, as the AR market pops up as well. But what about interoperability with other African countries in terms of their ecosystems? We obviously have seen, we have some fintechs that have been very successful, across Africa.
Yeah, I think interoperability is a massive issue in South Africa, first of all, because the regulatory landscape of each country is completely different. So what is applicable in South Africa is completely different to what is in Namibia, completely different to what is in Mozambique. Currencies, liquidity issues. There is initiatives. One is called the PAPS. And the other one is called the TCIB, which is funded by the Melinda and Bill Gates Foundation, which in essence are trying to address those issues of interoperability. But at the moment, from a remittance point of view, South Africa is one of the most expensive countries or G20 countries to send remittances. And the volumes are really big. So, for remittances, the SADC region is a big opportunity for any company looking to enter the market.
Fair enough.
So, one of your domain of expertise, Andres, is the whole crypto space, right? And by the way, Brett, you will allow me to steal 1 minute of the show to say that we are organizing or helping MIS and Rwanda Finance to organize the first edition of the Inclusive FinTech Forum. You can go on Inclusive FinTech Forum.
So this is the Monetary Authority of Singapore, right? MAS?
Exactly. And together with Rwanda Finance, because Kigali wants to become one of the catalysts of FinTech for the continent. They have a very sort of forward-looking legislation, and very.
When is this happening?
It is 20 to 22nd of June. Is a not-for-profit event, but the aim is to invite regulators from all over the countries. Ministers are coming, hopefully a couple of presidents. Right. I can't tell you yet. I can't spoil any official presence just yet. Otherwise, they will, I'll get in trouble. But the event is going to be significant, and one of the themes is, of course, digital assets. Now, what is really interesting is that it is not easy to make African countries talk about either CBDCs of their crypto strategy, because even if it is a project that is particularly potentially transforming for the country, it is not a clear success yet. Like Nigeria, for example, they have one of the few countries that have openly declared to be working on a CBDC. It is still not super, how do you say it? not super prone,
It's had
in
some
talking.
issues. Yeah, they've had
Exactly,
issues.
exactly. In talking about it. What's the South Africa position?
So South Africa has something called the Project Coca. Project Coca 1 was deployed in 2018 as a POC. And now we're in the second phase, which is Project Coca 2, to use DLT technology.
Is that with a C or with a K? Because if it was C, it's a pretty interesting name.
Coca. No, it's let me just, it's KHO.
Between one Italian to a Spanish to an Hispanophone, But hey, you're half Colombian, right? You said.
Yeah, half Colombian, half Brazilian. Ended up in South Africa.
In South Africa, yeah. Well,
yeah,
this is a global show, so that's good.
So talk to me about the Project Coca.
So Project Coca 2 is pretty much a program developed by the South Africa Reserve Bank, exploring the use of DLT technology to create an intra-settlement system between banks. So we have the likes of Standard Bank, the likes of Nedbank, Absa, Capitec. So it's mostly a program for the banks.
Fantastic. Well, Andreas, it's been great to get a bit of a feel for what's happening in South Africa. It sounds like the real revolution at fintech is not going to be about financial inclusion as it is in much of the rest of the African continent, but about access, financial access in terms of more sophisticated, more trusted, mechanisms and more localized, which is, obviously is a very different strategy for fintech than, most of the rest of the world where we're going for volume, as core there. So how can people find out more about the Fintech Association, Andreas?
Yeah, so our email is hello@finasa.org.za. So that's hello@finasa.org.za.
And okay, finasa.org, is that the website as well?
Yeah.
All right, we'll put that on when we post the show as well. So thank you, Andreas, for joining us. All the best with the Fintech Association there. And Matteo, thanks for sitting in the hosting chair with me again today.
Thank you, Brett. Thank you, Matteo.
Get better, my friend.
Thank you. Let's take a quick break, and we'll be back after these words from our sponsors. Welcome back to Breaking Banks. I'm your host, Brett King. I am recovering a little bit from the dreaded lurg, the flu, this week, so you'll have to excuse me if I sound a little bit subdued. But we have an interesting startup that we have invited on the show today to get a bit of detail on. It's an alternative approach to credit scoring and lending that is emerging, particularly in LATAM. But this is a model problem that I think is going to increasingly be looked at around the world, particularly as economic conditions change and as we get more data-rich exposure. So we're welcoming on the show Yoel Gavlovski. Yoel is one of the founders of QUASH.ai. Yoel, welcome to Breaking Banks.
Thank you so much, Ed. Thank you for having us today.
Quash is an interesting name. How did you come up with the name Quash for a fintech/AI startup?
So we were beginning the company, and we knew we wanted to focus into credit, in financial inclusion and AI, but we wanted to find a name that was catchy enough to remain on time. So at that specific point, we heard Jack Ma saying that the changes are happening. Jack Ma from Alibaba are happening so fast that make sure that you choose a name that in 40 years it still maintains relevance. So what are three most innovative technologies that we think will win in the next 40 to 50 years? And Qua was from quantum computing, Ash was from blockchain, and .ai from AI. So we thought Quash was catchy enough and brings that vibe, although we currently use mostly AI and potentially be using blockchain and hashing technology in the near future. We don't expect to use quantum for at least the next 10 to 15 years.
Well, in 40 years, it's debatable whether we'll still use URLs, of course, or phone numbers or identity documents in the way we do today. But anyway, that's another debate. So tell me about the business itself. You're focused on lending to less served creditworthy borrowers in when it says on your website. So you're talking about borrowers that have thin credit files in the term of the industry, or low credit reference information. And so how can you assess them in terms of their credit risk if they haven't lent before, or you have smaller amounts of data?
Totally. So we are referring to that type of segments in specifically emerging markets in the world. So we help financial institutions to increase their credit origination to their underserved but credit-worthy borrowers using thousands of alternative data sources and auto machine learning or AI. So the way it works is that as a society, we have generated more data in the last 2 years than in the history of the world, and new sources of data are enabling access to credit as never before. So we have been finding not only data sources, but non-conventional ways to evaluate these candidates. For example, our client Walmart in Mexico found out with us that if somebody bought $100 per month for 12 straight months, they easily pay $500 a loan of $500. So why checking them in the credit bureau? Some countries have some type of regulations that you still need to check on the credit reporting agencies, but that's just more on the regulation than on the evaluation component.
So what sort of data goes into the mix here? So, is it behavioral data? Is it payments data? I mean, famously, we had Scott Sanborn, who runs Lending Club, and he was saying, in the US, for example, that someone's pattern of paying their phone bill is a better predictor of credit default risk than credit scoring mechanisms in the US, as an example. So what specific data? Obviously, you've got purchasing data there, but what behavioral data are you tapping?
Yeah. So and it's true what he mentioned in the Lending Club case. So we have 3 types of data or analysis that we use. 70% of the problem currently is being solved by reprocessing, categorizing, contextualizing the existing information that they currently have. So most of these financial institutions have not refined with the advanced data analytics that we need today to find the 30 top metrics that companies like PayPal or Venmo use, like Gini, KS, Lawrence, Boxulot, vintage analysis, performance inference analysis, RNSIB, intrinsic value, PSI, population stability index. So those 30 metrics, basically, once we transform the data, refine their data, instead of using data in historical and reactive way, in a proactive and predictive way. So that's one, right? Then we have expert models in 14 financial products in more than 30 emerging countries, specifically in LATAM, where we use these expert models that are tropicalized, customized to each of these, to the first point, which is the data that we refine from the financial institution. The data that we refine from the financial institution might be, what data they capture when somebody applies to a loan, who they approved, and out of the one that they approved, who failed. But 10% of the sample, they don't tell us who failed, so we can do back testings. And finally, in terms of data providers, we use the example that you were saying, for example, telco. If somebody's prepaid in top of telco minutes, potentially he's not in the credit bureau. So if he's not in the credit bureau, how much recharge he's found in the last 90 days? If he did 3 times, he doesn't have not only ability, but the willingness to pay back a loan. Same for changing the SIM. We have 100% of the IPs and VPNs. So if somebody belongs to a top 5% most stable internet connection, they easily pay a loan on time. We enrich with psychometric data providers, so that measures willingness to pay back a loan with some questions that measure gratification, attitude towards debt, social desire, materialism. We enrich with open banking data provider, all of the information like transactions and movements that we can now enrich with open banking data. Normally, these credit risk directors and data scientists waste a lot of time and money trying to iterate, finding the exact weight that each attribute, characteristic, and dimension should have. And many other data sources, like, for example, metadata, that measures all the digital data footprint of how somebody answers when he's applying. Like, for example, how does it affect in a nano loan if he used the autocomplete elements? And finally, with ChatGPT, we are now capturing dynamic onboardings. Before there were static onboardings. Now you can answer 15 different questions in the onboarding of application of a credit loan to an individual. And if you want to apply pre-qualifying techniques, you can actually, if you know, for example, 4 things about a specific potential borrower, and you want to make sure that you ask the 5th right question or the 6th question before he just leave the application form, ChatGPT is enabling that, and enabling capturing 20 times more data sources like intellectualism, how genuine is his answers, or, for example, what's the actual intent that he has to get to use the funds of that loan.
So, are you able to do this in real time, or do you need access to data beforehand? How quickly can you approve this? Because, if we look at models emerging out of markets like China, where, there's not established, credit records and so forth, you've still got Alipay being able to use things like, Alibaba's data, for merchants to underscore lending there, famously with their 310 model, which is 3 minutes to apply, 1 second to approve, 0 humans involved. This is a 310. So, how do you talk about that in similar terms?
Yeah, so definitely all financial institutions want to have the minimum time of application, and so they optimize towards that. So the way they do it with us is that in the case they're going to be rejecting somebody, that's when they enable us or allow us to extend more time asking questions or finding more information or extending the time in which they take to apply. So, but normally they don't mind if they were already going to reject them, right? Now, in terms of what data sources come, all of it's in real time in milliseconds, but it all depends on how strict is the GDPR and CCPA. The GDPR, it's a regulation for those that know on the privacy on Europe, and CCPA in USA, like the California Consumer Privacy Act, and then same for LGPD in Brazil, and same for each of these countries, where most of them speak about the same type of regulation, which is that you can either be a data processor or a data collector. So data collectors are credit reporting agencies, financial institutions, and data providers. In our case, we are not a data collector, we're a data processor. So in the way the law regulates us is that basically when we're going to be doing back testings, we have access to the anonymous information of the financial institution, like no PII, personal identifiable information.
Sure.
So
you're making a blind assessment based purely on the data.
Yeah, exactly.
I understand that. Now you've been going for like 4 years. You've got how many financial institutions are using the platform now?
120.
So over that time, how have the loans performed compared with the scoring that you've done beforehand? How does that match in terms of performance?
So initially, when we discovered this metric, we tested in Central America and the Caribbean, which are very financial inclusion segments. We found that TransUnion and Equifax, which are the main credit bureaus in Central America and the Caribbean, were rejecting about 70% of the applicants by using traditional mechanisms, and we were able to increase in those 30 cases by 20% in the origination with no added risk. And the standard deviation that we have for that is 5%.
Okay, so you're talking about you're able to increase inclusion for credit access, but to 20% of customers that would have previously been rejected. Is that right?
Correct.
Okay, so that's pretty impressive for financial inclusion metrics. Now, in respect to the model that you've built, tell me about the AI. There's a lot of debate about GPT and these large language learning models and so forth. What type of AI competency have you built in the organization? Is it mainly a data science competency, or are you using learning models to improve accuracy?
Yeah, so it all depends on the level of the financial institution that we're targeting. So the smallest financial institutions, we take about 80% of the clients that we target. It's mostly data science, where they basically have this data, that they haven't pre-processed with machine learning models in the past, and the first time they get this Gini KS and all these 30 metrics, they end up having lifts in origination, and they get completely transformed their business, right? The second type of financial institution that use us are companies like Citibanamex or Scotiabank that they do have the capacity to build these 30 metrics of Gini KS and all of that, and they have hundreds of data scientists and credit risk directors. But based on economies of scale, they're not willing to invest the millions of dollars that we have invested in data pipelines, in data engineering, trying to not only orchestrate hundreds of predictive models across their decision engines, like rules, decision flows, etc. Like, for example, the FICO decision model and things like that. And then we have the largest customers like the BBVAs, the Santanders, the Caixas, Bradescos, Itaús, that they are willing to pay for investing in data pipelines, in data engineering, and for them we have built competencies of AutoML as a service for credit. So we are the only predictions as a service company in the world, 100% focused into credit. So the way it works is that for AutoML, for those that are not familiar, is basically the process of automating time-consuming iterative tasks that or machine learning model development. And so we basically have built a competency in the company that either data scientists can experiment, or credit risk directors that don't have the knowledge to experiment, they can use some sort of campaigns that speak more simple in their language, but it works for both departments.
Understood. What's the size of this addressable market, do you think, in respect to LATAM in particular? I know you're based in Miami right now, but and you're mainly focused on LATAM. But are you talking about access to, there's obviously financial inclusion issues still in the US and credit access issues in the US.
So the way we have it organized is that we have a served addressable market for LATAM, and then a total addressable market for the global. So in LATAM, we have about 1,000 banks, 2,000 fintechs, 3,000 credit unions, 15,000 other type of financial institutions, and about 768,000 retailers and e-commerces that are currently not lending or could be lending using buy now, pay laters, but are not making profits on the lending side. So that gives you, when you multiply that, the capacity that 4,000, that most of them could, in average could pay $4,000 a month for 789,000 financial institutions, you get a served addressable market of about $37 billion just in LATAM. And you can take that to the global and take it at least for $150 billion total addressable market opportunity.
Okay. Now, one of the areas that's interesting here is AI, particularly a conversational type AI, and we talking about ChatGPT and technologies like that, have the potential to actually be interactive. So where do we take this in terms of helping people change their behavior so they become more credit worthy? Because this is not just about data collection, but it's also about behavioral elements. So how could you use this to coach people so that they can become less credit risky over time?
100%. Yeah, the behavioral part is super important. And actually, last week I was with BBVA in their offices in Mexico City, and we were speaking about this. In US, you have this concept or the cultural aspect that everybody knows their FICO score, or they use Credit Karma as their social network for credit, right? So every 30 days, they're aware of the increase and decreases in and it's so important for them that they take care about it very, very much.
No, I know, but the FICO score is not a good predictor of credit risk.
Exactly. I was just talking about the cultural aspect, right?
No, but I mean, yeah, I understand that. But I mean, having come to the US with an excellent credit rating offshore, and then having to build it in the US, it's took me more than a decade to build my credit score, to 800 plus in the US. But the thing is, when I first arrived in the United States, even though I had a stellar credit rating, offshore from, in places like Hong Kong and Australia, in the US, I was a non-person from a credit file perspective.
Mm-hmm.
And so I had to build up that over time. So in that respect, the FICO score was not actually an accurate assessment of my credit risk from a behavioral perspective. It was how I had used the credit market in the United States. And when people have a low credit score in the United States, it's because they've defaulted or they've had problems paying credit, and they're punished for that. That's essentially how the credit scoring mechanism works. So for people that haven't used credit extensively, then it's you don't have the FICO scoring system. I don't want to pick on FICO and Experian and these guys, but it's designed more as a mechanism to manage risk for someone who has already defaulted. What we need to do is we need to have measures that look at behaviors over sort of this punishment mechanism. That's my view of the credit score.
100%. And going back to the point that we were speaking about BBVA, and they're taking the approach that that go in the same line that you just mentioned, which is that they are now have, for example, in their case, 20 million. And it's a project that we're working with them, 20 million individuals for financial inclusion that are in a situation of vulnerability, and they don't want to reject them. They just want to, first of all, enable them to whatever score they built with their internal data or with QUASH. They want to give it to them like in a B2B2C approach, and then also they want to tell them the exact reason, like with Shapley techniques, for example, that tells you the actual weight in which each attribute, characteristic, dimension, or the missing holes that are actually affecting the capacity for them to obtain what they were looking for, or either something that it could be smaller or in different, more light or in different quantity, but that at least help them in somehow. So that they can work. For example, if you have a formal employment, but you didn't report it to BBVA, the informal employment, you can upload sort of information that once get validated, it automatically interacts in a more dynamic way with them. And this is kind of the approach of the most important banks in LATAM trying to help these segments.
Right. Because I think this is the challenge is in the US, as you pointed out, we've been trained, on the credit scoring system, but it's not necessarily the best system that we could have. It's the system itself is 40, 50 years old now. And with AI, we've got much better methodologies here. And I know some organizations are already using this. Even you talk about Credit Karma, Credit Karma doesn't actually pull from the credit scoring data every month. It sort of replicates the algorithms or the credit scoring mechanism. So it's an approximation of that. But, we need to start, as we get more sophisticated technologies, certainly we should be able to have more control over people's understanding of their behaviors that constitute risky behavior. So that's my point, is how do you
100%.
how do we how often are we having to inject ourselves into people's lives to have an effect on their credit riskiness?
Yeah, so Brett, the answer to this question is exactly the reason why I ended up building and founding this company about 4 years ago. One of the founders of Quash worked for about 10 years building the Facebook Ads Optimization Manager at Facebook. And about 10 years ago, when that technology was basically generating the most revenue for that Facebook or Meta, he was building the AutoML to help companies like T-Mobile and Budweiser in the US go from 300 campaigns to 3,000 campaigns. Now, that same technology, we thought it could disrupt the financial services world, and that's the reason why we built Quash. Why? Because now we have clustering techniques that create correlations in a non-conventional way, where you can, for example, if Brett is similar to these 1,200 individuals based on these interest demographics and behaviors, or for example, this woman, these 1,200 women that are married that have more than one child that earn more than this per month, that specific cluster, it's like a lookalike credit cluster, could replace a basis model or a basis machine learning model that a financial institution is using. Based on that angle could have better ROI and confidence that individual will pay on time. So what we're building with AutoML is the capacity for these financial institutions to go from a few changes in their credit policy a year to hundreds and thousands of changes that depending on when a cluster can replace in a champion challenger or A/B testing way, another angle for better performance.
No, I understand that from a data modeling perspective. So you've created, you've got these cohorts, from a data perspective that you've identified that are less risky, that fall outside of the typical rules or typical scoring mechanism. But have you thought about using nudges or notifications to customers as a mechanism to help them become less risky over time?
100%. Yeah, it's the approach that we were taking with the BBVA app in the last example, and the convergence with the last concept that we were speaking in terms of clusterings, all of that point out to this kind of data wallet vision where the individual not only has a score and the Shapley techniques where you see the actual weight that each attribute should be having and the recommendation, but each of these clusters and correlations actually have a message for them. So once you weight which are the ones that are going to be moving the needle the most, it's when, or depending on the financial product that they're looking for, because some of them might enable them to have a nano loan, a micro loan, a credit card, a motorcycle. But then it comes to a small and medium business loan or a mortgage that require much more than just good behaviors and questions, that's when it comes to challenge. So right?
What's the average loan size we're talking about here?
So for nano loans, in Latam, nano loans are considered up to $500.
Right.
And then you can speak about micro loans all the way up to 5 to 10K. Once you go from 10K up, it's called consumer loan.
Right, yeah. More traditional modeling. Well, this is the big growth area in globally. I mean, even if you look at WeBank's work in Shenzhen in China, the nano loans, average loan size is like $50 US, but they've got 300 million customers in that range. So there's an addressable market.
Yeah, and with that approach, they diversify because your models are as good as your data is. So we get a lot of clients that come without using any AI in the past, but they have like 10 applicants of mortgages or 10 applicants of small and medium business loans a month, and the machine learning models don't work as good as when you have a large amount of data. So that's right. Going back to your point, the approach that most of these businesses have, where they cover more than 5-10 different financial products, is that they start learning from the financial institutions that are much voluminous, and that's how they build the whole credit history on them to give them larger size tickets.
So you've talked about BBVA, Scotiabank, I note, is also a client of yours, Acacia, so forth. So, you've got some big names there. Where can people find out more about the platform?
So you can send an email to info@QUASH, QUASH.ai, or you can just go to our website or find us in all of the LinkedIn or different social medias.
Now, you have had some success. You raised $1 million in early stage funding after winning the Fintech Americas award. Where are you at in your maturation and funding cycle?
Yeah, so we raised $4 million already in a seed equity round from Insight Partners, the founders of Riverwood Capital and H20 Capital and other investors. And yeah, the way we see with all of the challenges of macroeconomic changes and where the stage of startup and banking is today, we are taking, an approach a little bit more conservative in the way we invest in R&D in these days, hoping to have, lots of capital.
I know, but you've got revenue already, right? So you're operational. So that's good news.
But what we're trying to hit is about 700 financial institutions using QUASH in the next 3 to 4 years to try to have numbers. But we expect to have about doing a Series A around next year. Yeah.
Fantastic. Well, Yoel, it's really interesting to see how AI is being used to change access to financial services, particularly for credit access. Thank you for coming on Breaking Banks today.
Thank you so much, Brett, and for the invitation, and see you around in all of the events that we made around the year.
Absolutely. You're listening to Breaking Banks. That's it for today's show. Thanks for catching up with us. We do like to highlight startups from time to time working on some leading edge technologies like this. I hope you found it interesting. If you do like the show, please leave us, a review on whichever podcasting platform that you use. That is helpful for other people to find the show. And of course, make sure you tweet out about us or, do status updates on LinkedIn or whatever your social media platform of choice is. Thanks for joining us. My thanks go out to the team at Provoke, Lisbeth Severins, our producer, Cameron Hersham, our audio engineer, the social media team, and so forth. That's it for this week. We'll see you next week back on Breaking Banks, the world's #1 fintech podcast. That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.